And then, all right, now I hit the record. Welcome everybody to the Sunday session with us. If this is your first time with us, welcome and join the conversation. Our conversation is usually on all things finance with a very specific plan in mind. And we talk about a variety of topics from real estate to stocks to bonds to cryptos to anything that relates to your professional portfolio as you grow. There again, it doesn't matter where you are on the spectrum, whether you are a beginner, whether you're an advanced, we are all in need of help as we go through our journey. Let me mute all because I hear someone's microphone up. There you go. All right, so I muted everybody. The goal there again for us moving forward is we're all here for learning and educating ourselves about one another and with one another. So, you know, there's nothing out of bounds. Whatever questions that you have, please bring it to the forefront during the Q&A session. Today's topic is what to do next. Now that the VIX is at 28.3, now that inflation is 8.3, and now that the stock market just had a big drawback. You know, is it a drawback? Is it a recession? You know, nobody knows, but they're telling us anyhow that this is the beginning of a recession. However, if you are insulated to these markets and understand exactly how your portfolio plays into it, you should not have an issue as it relates to you being very absorbent into this play. Now, I can share with you what I'm doing in this space, and I'll just share my screen here for a sec because I want to pull up share system audio screen, bring up looks like my microphone is disabled when I'm sharing the screen audio. Okay, all right. Well, let me go back here and just share the screen only. There we go. All right. So Charles Schwab, I don't know if many of you have a broker or not, but Charles Schwab is one of the great places that I go to for information. You can use any one of your brokers. I just simply been using them a long time. Now, if we look at all the indices between the Dow Jones, the NASDAQ, S&P, and Russell's, let's take it from over a year ago, this time last year. You realize that as of January 2022, the Russell's was already in negative territory as it related to their stock pullback from the prior year. It took, there was a pullback early March for the other three, the Dow Jones, the NASDAQ, and the S&P, but they really didn't get going into negative territory until this month of May. Now, what happened this month of May? Well, the Feds introduced a price rate hike, and that simply scared a lot of money off. But what I do want to mention is that during these cycles, and you can follow Ray Dalio, I'll send you guys to a link that Ray Dalio did an excellent job on the cycles of the economy. This is not a chance to be fearful. Most individuals who that I'm aware of, they are buying into this market. So as this thing drops, whether it drops into recession or not, they're scaling in increments, mind you, and they're doing what's called dollar cost averaging down. Now, that's not always recommended in the books, but you have to measure out your risk versus reward as it relates to that particular strategy on your own. But most people are dollar costing down, especially into the area of these sectors right here to the right. So it says that consumer discretion is at 4 percentage points for the day. Let's see exactly how the sector plays out over a year time. Well, over a year time, energy now is soaring. Consumer staples is 10%, utilities is 8%, healthcare is at 4%, real estate is at 3.8%. Now, I want to highlight that just for a moment because a lot of us have real estate in our portfolio. Real estate is a great hedge for inflation, and that's one of the reasons why we park our money in real estate. Generally speaking, these downturns take anywhere from, depending on how deep they go, they can take anywhere from 1 to 3 to even 5 years. However, if you know that, you'd start to invest accordingly to make certain that millionaires are created when these downturns occur. So that's why everybody, I call them smart money, they start scaling in and investing a portion because they know statistically that millionaires are made after these dips have occurred. And this is what is considered one of the greatest transference of wealth when you see this type of pullback. Even if we go into a recession or a depression, what generally happens? Normally the government starts printing monies and they lower the interest rate to 0. That's the only thing that they can do. Historically, that's the only thing they've been doing since 1929. So, and that's how they prop up the economy in order to get us to where the economy needs to constantly grow. So with that said, if they're not going to do anything differently and the Fed doesn't have any mandate, generally speaking, you should really buy in the stock market for the long haul. Now, we've introduced other alternative investments recently, but there again, you have to have your own plan going in. So there again, you should follow the news of some of these sectors so that you could be on par with educating yourself as it relates to your position and the type of investments that you're doing. I also like Charles Schwab because they have most active companies based on price increases, price decreases, as well as 52-week highs and 52-week lows. So if we look at the 52-week lows, any one of these companies here, seeing that they're already at their 52-week lows, and depending on my mandate, I may just pick one out of them and go crazy and short it until the trend has changed. But at this particular juncture, I'm leaving stocks alone for right now and concentrating on the valuation and fluctuation of gold. I'll bring that up for you right now. This is the daily chart for gold. And from April, let me get a good date in here. From April 19th, gold has never looked back. Gold has been sinking like a rock. So from about 1990 all the way down to 1800, gold has made 100 reduction, which also means that, in this case, some individuals made millions of dollars in this decline. And I'm no different than the other speculator investor. I'm shorting gold and I'm still shorting gold and have been shorting gold. and it's been a wonderful ride for me to ride this thing all the way down. I can't wait to ride this thing all the way back up when this thing has changed. So there again, our club is always about moving forward and making money in terms of understanding the vast array of way of doing that. So with this said, this is part of my portfolio. You got to ask yourself, what is part of your portfolio? What are the things that you're doing in order to, number one, either increase your W-2s or increase your 1099s or to reduce your expenses, one or the two. In my book, I simply say, if you make more money, that will take care of 99% of you having to worry about your expenses. Because if you could quadruple your income, guess what? I wouldn't worry about the expenses at all. Within reason, mind you. If you have a one-to-one income to expense, then that's something different. And then you really have to evaluate what you're doing as it relates to that, because where are you spending the money? Your ratio from expense to income should be almost, I'd say 1/10. So if you can get your expenses underneath 10% of your income, now that can change things for a lot of people. All right, so with that said, speculations this week, I'm going to leave it here on Charles Schwab, but I'll open it up for discussion in a little bit to see where everybody is at. But we all have an idea of what my plans are, right? And I'll share my plans again with everybody. In building a portfolio, I'm leveraging the bank's money, whether it be lines of credit, whether it be HELOCs, no matter what it is. And it's my job simply to 10x that money through whatever vehicle I can as fast as I can, right? So whether that's in the alternative space, whether that's in me trading Forexes, whether that's in me investing in real estate, whether that's me being a lender, all of that is a part of that facility. And it's my goal simply to turn the monies over as fast as I possibly can in order to make a return on it, so that, number one, the very first thing that I do once I turn money over, I don't pay myself, right? Out of the turning over of the money. I put that money back where it came from. So whether that money came back from lines of credit, HELOCs, credit cards, that's the first place that money goes. And as the money constantly turn and we get back to zero on those lines of credits and everything else like that, we then concentrate on debt immediately after that. So you have to imagine that you're going to constantly turn over money and hustle, whether it's that W-2 or that 1099, in order to turn that money around so that you can reduce debt. You reduce debt, number one, your credit score is going to go through the roof, which gives you the borrowing power to borrow even more. If you have the borrowing capacity with turning over the revenue as you have been, guess what? The sky's the limit. Today, my borrowing capacity may be $200,000-300,000. Imagine if my borrowing capacity was $2 to $3 million, right? Imagine what type of assets I would be going after when it comes to that type of borrowing power. Well, the goal is that I'm not going to borrow money and then go buy a car. You won't see me in a borrowing $2 million and then next thing you know, you see me in a Lambo. That doesn't make any sense to me. So for those of you who are thinking that, borrowed money is to simply look pretty or to be a part of your consumerism within your own construct, then you have been mistaken all along. The borrowed money is to place into assets that can produce money and return that money to wherever you're getting it from. So the individuals who loaned you that $2 million, they didn't loan you that so that you can personally edify yourself. They loan you that money so that they can get that money back, and in turn give you a greater borrowing capacity so that you can go after bigger assets. At the $2-3 million range, I'm going after assets in the multifamily space. Next week, we have a guest coming on who is an underwriter in the multifamily space, and you really should question him quite a bit on, number one, what is the current market, as well as is multifamily still a viable option as it relates to the interest rates going up, right? Are there multiple deals still active in that space? Well, he'll come on next week and share his insight with us. But there again, by no means, look at that individual as a partnership opportunity for yourself as well too, for those of you who are investing in the space. Once we are able to write a check on a monthly basis, we will then partner up with that particular individual and go forth in the multi-family investing arena, primarily because we've known him for a long time. And we've come to trust their underwriting and their judgment. But it also gives us a completely passive space to play in, because at the end of the day, I don't have to be out there changing toilets and doing the paints and the whole 9 yards. Simply write a check, and after 12 months, I should see a monthly check coming back after they've either improved the property or take it up to a level that the property is stabilized and profiting nicely. So with that said, that's my plan in a nutshell. And as we build our own portfolio out, we're going to have challenges just like anybody here at the table. I'm getting out of corporate America probably in about a year and a half, and into that investor spot really nicely. So that means I simply need additional team members on my team from legal, as well as partners in the local markets in order to take on more and more acquisitions as we move in the space. And everyone here is no different than that as well. Our goal is to, number one, preserve capital, but at the end of the day, move capital in the space that can give us the greatest return. So I'll open up the microphone to anybody who would like to ask questions or talk about a certain thing, and then we can go from there.
I can start off with a question.
Go ahead, John.
So just out of curiosity, I have a battle with myself over gold, and you mentioned you were shorting it.
Yeah.
Traditionally, it should be skyrocketing during inflation, but with the introduction of NFTs, I think that's part of the reason gold has been killed. Why are you shorting it right now, and where do you think it's going, and when do you think it will turn based on inflation?
I have no clue when it's going to turn. However, I know the trend is negative at the moment. However, there's a greater play here that the economists are talking about gold, right? Number one is with the war in Ukraine, it's been stated that the bigger banks and insurance companies are trying to take gold to $1,600 an ounce, right? And the reason for that is they don't want Russia to have an external revenue source through gold. So that's just a geo-topical conversation on gold. It looks like it's playing out that way. Because there again, my money is never going to change the trajectory of gold. The bigger players in that market are the banks and the insurance companies. And with me being a small skiff, I'm just skiffing through their battles. So That's what the economists are projecting, $1,600. I technically, as a trader, don't care because I measure my lot sizes based on my hedges. So whatever the trend is at that moment, that's the moment that I take advantage of. And right now, that moment is negative. Will it change tomorrow? Well, if it changed tomorrow, then my position changed. But as of right now, with so much uncertainty, you are absolutely correct that in the depression, most people use gold as a safety matrix in order to store their wealth. The difficulty that we're having right now is that gold is no longer that safety during this time, primarily because of the geopolitical risk and the relationships between China, Russia, and the US.
Yeah, it's frustrating because as an investor, the digital space now competes with gold. The war,
Yeah.
inflation, and traditional metrics are no longer shaping gold the way they should historically. And as an investor who's looking for less of the short-term plays that you're using and more of a long-term investment play, it's very difficult to decide whether or not to get in a space.
Well, okay, we have to do it from two perspectives, right? The short-term plays that I do, they fill my long-term brackets, right? So I am long on gold, but I'm long on gold through ETFs, right? So I'll have a drip policy there, but as my portfolio is this, all my long-term positions now are being hit, right? They're going negative, right? And I'm okay with that because I have a drip policy going into each and every one of them. Where do I get that drip policy from? I'm shorting gold and taking the shorts and the profits from there and redeploying them back into my long-term position so that I'm net, even if I'm net positive over the long haul, this thing is going to take me to exactly where I need to be. However, I found out that as I've been shorting gold, I've been doing extremely well in terms of opening the gap of what needs to be deposited into the drip policy. So I've far superseded what I needed for the drip. But nonetheless, you have to have a viewpoint that no matter where the market is going, historically, the market has always increased. So I'm not fearful of that. I'm just making sure the impact of the loss is not absorbed to the extent to whereby it hurts my portfolio. Meaning, okay, I'm losing on the equity side. All right, and the ETF is taking a hit. Okay, that's great. But on the passive investment side, I'm making a killing, which is offsetting that. So, we say these things are zero-sum games. In the analytical world, you want to be mindful of that as you play in the space. But if I were you, I wouldn't be fearful of it. Just be mindful of your risk and the downside. So I'm protecting the downside just as much as waiting for the horizon of the upside. But whilst I'm waiting, I don't want to be waiting in hopes that this thing is going to turn around. I want to be waiting in profits to saying, look, if it does turn around, I have a position available for it. Does that make sense a little bit?
Yeah, traditionally, I haven't been into Forex or play-by-play individual stocks lately, but I'm thinking of going there while I'm on hold on the real estate side. And you mentioned you do Forex as well as, digital, and other things. Are you doing anything with individual stocks now just to play with them on your own for an advantage to hedge, or are you still just buying through funds?
No, I do individual stocks as well too. I own Nike, I own Apple, I own Walmart. I do own individual stocks, but I own them through a fractional position that I've taken with acorns.com. So I've tied my spending to investing in the stock market, right? Through Acorns. So every time I use my debit card, guess what? It rounds up and it buys fractional shares into all of those big companies. So those companies now are negative for me at this particular time in that portfolio to the tune of about 3 to 4 percentage points, which I'm okay with, right? And the reason I'm okay with that is because I can do up to 10 to 20% per day on the Forex side, which is really, I mean, don't get me wrong, I didn't start there. I was losing in Forex for a long time until I understood how I work. Right. Oh, and let me give you an update on some of the returns on the meta-fee yielders. Meta-fee yielders. Da, 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 da. Okay. So I've started to make withdrawals out of this thing, and so far it's looking all right, Next week, we'll probably do a 6K withdrawal out of this thing and waiting on those contracts to expire. This thing is taking forever.
Yeah, I have only 9 days left on my first contract, so I'm excited.
Okay, that's going to be cool to see.
Mm-hmm.
Yeah. Now, for those of you who are in this space, I won't be presenting any other platforms at this particular time. For that, you'll have to reach out to me privately for those who are interested in this space. And let me see here, transactional history. Oh, see, total withdrawn, almost $8 grand. So that's a beautiful thing. And next week we're looking at about probably $6 grand. No interest on Saturday or Sunday, which is pretty cool. I had a withdrawal today of $2,700.31. I should probably see that by next week, Monday or Tuesday. Next week, I'll be withdrawing something like anywhere from $1,200 to $1,300 per day out of this account. And so that's it in terms of results on meta-fee yielders. And there again, it goes back to my crypto wallet. I sell out of Bitcoin and then I transport that to the bank itself. So that's it for meta-fee yielders. Now, privately, we're doing some other stuff in some of the other spaces. I'm probably up to $800 a day in one account, and that account is growing nicely. I think that by the end of 14 days time frame or another 15-day time frame, we should be up to $1,600, $1,700 a day in that account. So it's growing nicely. Any other questions out there?
I had a question about which wallet that you use. Do you just use like Coinbase or
sorry, go ahead.
wallet? Which wallet do you use?
The wallet that I use. Yeah, you're asking about the wallet that I use, Dr. Jackson?
Yeah, I have Coinbase Pro that I use for most of my Bitcoin transactions, and I guess I'm not sure if I should not be keeping it in there, or I should put it in a quieter place, you know? Or what are your thoughts on that? I really am not looking forward to a recovery passphrase.
Well, you're gonna get a tax hit no matter which wallet you use, right? Primarily because you're gonna have to put in your credentials in any event in order to get certified to use their platform. Right now, I use Gemini. I mean, I use more, but Gemini is primarily my go-to for this particular time frame, only because of how easy of use it is. But they got some security on here out of this world, man. See, I can't log into here, and I'm logging in right now, but I can't even log into here unless they send me a 7-digit code, right? This code itself will then take me right into the platform itself. And I'll email everybody my, how should I put it, my affiliated link for Gemini right after this call, or I'll copy it right here and let me send it to all the individuals right now. Email guests. Oof, there's a lot of you. Well, don't want to email it in this space, but I'll email it after this call so that I can blind copy everybody on. But Gemini does well for me because I can go right over here to the transfer section and either make deposits or withdrawals out of the Gemini system. And it's very easy for me to do. Withdrawal from Gemini. There again, my withdrawal after, let's say after I convert from Bitcoin to the cash, I could continue in this section and that money goes right back to my account within 24 to 48 hours. So I kind of like that, right? When sending monies to these accounts, even when I first started, the most frustrating thing was either I had bought the cryptocurrency and I had to wait 4 to 5 days in order for it to clear, which means that I was subjected to the fluctuation of the coin itself. However, after realizing that, my deposits now have all changed to US dollar. And the method that I chose is I wire the funds in. So from here, I can wire funds in and go to continue, and it'll give me all of the wire instructions right here that I need. Right. Now I do this as well for Kraken as well too. Kraken is another one that I have a wonderful experience with, right? So let me do this. Let me send an email out to those of you who are on this call. All right.
And while you're sharing, can you also kind of give me a few ideas of some of the funds that you use with Schwab? I kind of stick with some of the low expense ratio mutual funds. I do like a small, large, and international right now.
Yeah.
Any other thoughts?
I like the Charles Schwab ETFs primarily because you know, it's almost like walking through a food store, and you know, instead of, if I go through the bread aisle, I may like all of them, right? So why not I buy all of them, right? And there again, those are just drip policies. So far, a lot of those ETFs have been doing anywhere from 10 to 20 percentage points per year. And that's okay for me, right? The goal though for the stock investing, whether it's Charles Schwab or Robinhood or whomever you use, E-Trade, you really want to have close to, I would say, anywhere from a minimum of 10,000 shares of whatever you're investing in. All right, so that's the goal. 10,000 shares of whatever you're investing in. For generational wealth, you're looking at anything greater than 20,000 shares. So start small, know it's a long game. I choose ETFs primarily because of a bet that Warren Buffett had with some of the hedge fund guys. I think the bet was like $1 million or something along those lines. All the money donated to charity. And some of the hedge funds guys who said they can beat the market and beat Warren had a 5-year run. And Warren said all he's going to do is invest in ETFs. And over the 5-year period, Warren Buffett beat them on the ETF investing, meaning he didn't do any research whatsoever. He just constantly invested his money into ETFs with the parameters of the competition, and he beat those guys. So they had to ante up a check to him, and of course he donated it to charity. So if you're in the daily picking of stocks, that's good for you. But if you're not in the game minute by minute, hour by hour, I am all for individuals becoming traders, because now that's a skill set that you can't really give away, right? Me trading in ETFs, that's a passive action for me. Me investing in fractional stocks, that's a passive aspect of my portfolio. However, me involved in trading, I'm actively engaged in that. And if you were to tell me that you're actively engaged in trading, then that's something totally different, because the goal within trading now is to accumulate most of your money through the trading proceeds and redeploy back to your long-term proceeds, so that at some point in time, you may want to pull away from trading for a while. All right, so all roads lead to that long-term investment strategy.
Yeah,
But
I gave up individual stocks a while back. I really didn't have the stomach for it. And then while you're talking about ETFs, can you talk a little bit about the tax efficiency of them versus mutual funds?
Right, the tax efficiency of an ETF, they come with an expense ratio, right? So they're taxed a little differently than regular stocks. For that, you're gonna have to pay some money, Dr. Jackson, to your CPA, because those guys would then be saying, Devaughn, you're giving financial advice. I have a beautiful CPA that I will introduce you to whenever you're ready. Right? And for me, I make the biggest tax percentages in terms of getting us close to that 1 to 2%. It's not going to be in ETFs. I don't get too much of a tax break there. Where I get the biggest tax break is the depreciation of real estate assets. The biggest. Those put you down into the 0% category. So that's the overall goal. Yeah, we're talking about all this passive stuff and how to interconnect it and everything else like that. But when I do an acquisition on a real estate, I leverage the depreciation to get us to claw back into that the high net W2 income, so that we can get that down to 0, right? The ETFs and the stock play don't do that at all. So I don't really see a huge upside on the tax play as it relates to investing in the stock market. I see a huge tax play as it relates to investing in real estate. So let's say you go into a group, you purchase these 100 units, and those 100 units, the developer is passing on the depreciation to you. In a lot of cases, when they do their cost segregation studies, sometimes that equates to a lot more money than even your investment that you're investing in. So those claw back into your W-2 money, which actually puts you in the 0% category. You do enough of those per year, then it makes sense. So, for that, the individual who's coming on next week in the multifamily space is super critical, because at that particular juncture, I too will be partnering and doing deals with them probably in 6 to 8 months time frame, just to take advantage of that cost segregation in the multifamily space. And why I can do it in the multifamily space at a greater rate, the single family doesn't do it fast enough. The multi does, though. Only because of the volume of units that they manage.
Let me ask a question.
Go ahead.
I heard something about Coinbase having a problem with bankruptcy or something, and to move your assets out of there. So I had an article that's out there. You can look it up and Google it yourself, but just wanted to talk about that. The other question I had is, are you buying gold and silver to hold as well?
No,
Okay.
I'm paper trading gold and silver. I don't need to hold it
Okay.
at all. Doesn't make sense. I mean, I don't want a room full of gold in my
No,
base.
No, I'm talking about like in a vault.
No, don't even want it in a vault.
Okay.
But to each his own. That may well be well for somebody else as well too. Someone may just want to have their gold in a vault and everything else like that. It doesn't match my lifestyle, meaning I don't want to hold any physical assets around me whatsoever. In the next 3 years, I see myself on a boat. Don't want to be thinking about assets at all at that point in time. All right, didn't see anything here about Coinbase. Let me go over to page 2. Coinbase bankruptcy. It says asset lacks bankruptcy protection. As disclosed, Coinbase users call transfer crypto to hardware. Coinbase banks are now almost as cheap as Russians. Users may lose crypto. Coinbase says if it goes bankrupt, it might seize users' crypto. Dr. Jackson, are you familiar with the Luna having a difficulty this week in terms of how they lost $300 million out of their liquidity pool, and that tanked one of the coins over the last 4 days?
I haven't heard about that.
Yeah, well, that doesn't impact Coinbase or anything of that nature. But what it does say is that shorting in these liquidity pools can occur. Now, the timing of that particular short was very speculative, and the groups that shorted that particular liquidity pool made off with about $300 million in over 2 hours, something like that. However, that particular liquidity pool for that coin was in transition from moving to a larger pool, and hence their smaller pools got attacked in transition. And it was completely speculative, because at that same token, had the short occurred during their larger pool, it would not have had an impact. But because some of the monies had already been moved, the coin suffered a negative impact that way. So, but it didn't impact the crypto market at large. It had nothing to do with the smart contracts, but it still indicates that, shorting in the 1920s in the stock market is still a thing, even with shorting in the crypto space. Learning how to trade, once you learn how to trade, no matter which market it's in, you can actually trade these things on the back half of the exchanges itself and short whatever you want to short as well too. So it's just a matter of skill set. So some call it crypto, some call it seizures, but whatever it's called, with this idea of Coinbase now even talking about bankruptcy, I might move my money out of Coinbase just out of curiosity.
Did
Just
you
so you'd
see
be
the
safe.
article? I put the article in the chat.
Okay.
The link to the article in the chat.
Okay. So anyone can go here to the chat. Allison put a link right here.
Does everybody have a hard wallet or a hardware wallet, cold wallet? I just got mine this week. I can suggest a couple of good ones if you want them.
Mm-hmm.
Yes, please place them in the chat. Now I'm like, okay.
Yeah. No, any help we can give, by all means, that's why we're all here. But I do like the space as an investment opportunity. I like the space because of the hyper growth. But there again, I'm hedging this space with other spaces as well too, right? The very same concept that John had asked earlier. The market is falling. What do? You got to have a plan for, even if my crypto markets fall, what is my plan against that, right? How do I offset the risk of the crypto market falling with the investment in there? Because I have a diversified play in there. It offsets any losses within my entire portfolio. So it kind of protects the whole portfolio, kind of sort of protects me, right? Meaning, that's also one of the reasons why I buy businesses as well, right? So a business that I buy now should pay me anywhere from 100K to 200K a year. That now offsets also the impact on the cryptocurrencies within that space. So there again, the portfolio that I built for myself or the portfolio that you guys built for yourself should insulate you enough to protect you against any downturn risk within your portfolio, and you shouldn't lose any sleep. Now, the only time I lost sleep was over the last 3 weeks, getting one of these other crypto platforms to act right, meaning I had to hit the button every 2 hours and 10 minutes, but that's a story for another time frame. Right now, the goal is to understand exactly how you're building your portfolio and how you're making the play to scale your portfolio. We haven't gotten to that idea yet of scaling. For me, the scaling aspect now has to be balanced out in the physical world, primarily because this week I'll be looking for a law firm to handle most of our personal business to help us scale. So I don't want to handle that legal work myself, but we have been engaged with a law firm that would be willing to take that work on so that they can handle all the contracts negotiations, they can handle all of the heavy lifting so that I don't have to be in the middle of a lot of the acquisitions in the space.
I have a question.
Mm-hmm.
There are links. I have links for one of the wallets. I didn't want to overstep anything with you, Devaughn.
No,
So,
go ahead. Put it in the chat. Please,
It's
by all
just
means.
one. It's just one. It's just one.
That's all.
But I
That's
like
okay.
this.
Put it in the chat.
I like this one because it's a hybrid. It's a hybrid between a hot wallet and a cold wallet, so it's pretty cool. So I didn't want to leave that out, but it doesn't require a link.
Yeah, but does everybody understand the difference between a hot wallet and a cold wallet?
I
Right?
don't know. Do they?
If
No,
anybody,
so a hard wallet is like a USB drive, and then what's the cold wallet?
How you doing? That's Christina Jackson.
Oh yeah, hot wallet is online. Cold wallet is you take it offline and you use it back and forth. You know, you keep your assets in there, digital assets in there, crypto, and anything else that's digital asset, right? And then you have that's the cold wallet. So you want to take your your hot wallet and transfer things to cold wallets for you know, hacking protection and all of that. It's the government can't even get to it. I mean, it's just, you know, away from everybody. But the one that I'm sending, this is a hybrid between the two, and I think you want to know about that. So that's the only one it's a little different, but it's pretty cool. And it's only $99. So
Mhm.
yeah, these wallets aren't expensive.
So what's the benefit of having a hybrid as opposed to just getting one that's completely offline?
You'll see, because like when you want to move between the two, the hot wallet makes it really easy, but of course you know, it's prying eyes, right? The cold wallet is completely like a USB, like you said, that you carry around. So sometimes it's just not as convenient. You can't plug it in. I got, you know. So the hybrid one is a hybrid between the two. It's a credit card, but it's a cold wallet that it works on. It sends a signal to your phone. It's really cool. There's a little video on it and all that on this website. So I just wanted to make sure that I shared that because I think it's pretty cool.
And so,
Yeah. So I'm gonna send it. Let me put this stuff in the chat so you guys can start looking at it.
Christina, here's how I would do the cold wallet scenario. Number one is, in your hot wallet, you're making money faster than the tax liability, right? And to give you a chance to think about your tax liability, I would park some money over there in the cold wallet until I figure it out.
Right. Out of harm's way.
Right? You get up in these things, you get up to $50,000, $100,000, $200,000 a day. Don't get me wrong, that's a good problem to have, but now you got to really figure out how to deploy that in the most tax efficient manner. So I would be parking it out of prying eyes and giving myself a chance to think about that deployment.
Well, I definitely got an earful today, so I appreciate it.
Yeah, but by the time we get to that problem, that's why I'm bringing on individuals with bigger projects to talk about, specifically for those type of deployments. Meaning, we need to deploy 10 million. You know, we should have an asset up on queue for all of us to think about, if that made sense. You know, you get to $20 million projects, $30 million projects, and the likes thereof. So you start deploying money within larger groups, whereby it's not you taking on 100% of the risk. And there again, you're impacting your tax consequences simultaneously. So that's how we're leveraging it in that space. Any other questions at this particular juncture? with that said, I'm going to close out. I will see you guys here next week. And then we should have a special guest in the multifamily space to talk to us about multifamily, how they're underwritten, how to invest in them, how to get started so that we can add that to our portfolio. And how do we then make that a complete passive activity so that we're not getting calls in the middle of the night about changing toilets and everything else like that. Other than that, I'll be here next week. Thank you guys for coming, and happy investing for this week.
Thank you.
All right, Allison. I'll hang around
you.
for whoever
Goodbye.
wants to hang around. All right, Dr. Jackson. Oren, I sent it out tonight.
Hello,
Hey, we say Whitney.
what's happening?
Really hanging in, man. How you hanging?
I just reaching my, I just reaching to catch everything, but I was right there in the zone. You know, not driving at me little tires.
That's
Yeah.
good, man. But did you understand the conversation today?
Yeah, yeah.
Okay.
I just,
Okay.
thought, I was trying to understand with the wallet, the hot and the cold wallet. Do we need to sign up on that or get that or?
No, not right yet. That's for the cold wallet for a little bit later on. The
Uh-huh.
idea is to make some money first,
Okay,
and then we'll deal with the cold wallets afterwards,
okay,
right?
yeah.
Mhm.
All right. So
Yeah.
how you situated this week? You busy?
Yeah, man, I could be busy every day this week coming.